Welcome back, folks. In this video, I want to talk about how to identify discount pricing. When you want to buy something, you want to buy it on discount, right? Buy at wholesale price, not retail. And that's what I want to walk you through in this video, okay? So at first, I'm going to open up a 15-minute chart, okay? So let's jump into a 15-minute chart, 15-minute, okay, not 50, 15-minute. And I am bullish still on gold. I'm looking for higher prices, okay? And I don't want to buy at these premium prices, right? Even though I do have an objective of higher prices to come, I still want to get a good entry, okay? So let me show you how I determine a discount price, okay? So I try, and let's actually do this on a 1 hour chart. It'll be easier to do it on a 1 hour chart. So all I want to do is I just want to mark out the current range. Where is the low and where is the high in this current move, okay? So in this current move, this here is the low, okay? And you want to make sure the low you're choosing has taken liquidity. It doesn't have to be the absolute low, but in the current move, right? This is the current leg, okay? So that's the low. So I'm going to take my fib and put that on the low and then put it on the highest high in that leg, which is right there, okay? Now, you can see that there's a midpoint, right? Fibonacci, I'll just show you my fib settings. All I'm doing is turning on 0.5. That measures the midpoint of the range. Anything above that yellow line is premium pricing. Anything below the yellow line is discount pricing. Okay, so if I want to long a market, I like to long a discount pricing. To me, that's wholesale pricing. This is where retail traders are getting in. Okay, they're looking for fair value gaps or bullish order blocks or bullish breakers in this premium pricing, and they're taking that long entry. Okay, now that's why often you'll see price will retrace into a order block or any type of bullish signature. Retail traders will get in, or ICT retail traders. There's now such a thing as an ICT retail trader because there's so many people out there trading ICT signatures. Okay, they'll get in. There will be a reaction. The market will move up, but ultimately they'll get stopped out. That'll be the liquidity for the real move to come. And so we want to be on the side where the big boys are trading the market, and they're going to be trading from discount pricing. Okay, so what I like to see is I like to find order blocks. Okay, from bullish, I'm looking for bullish signatures below discount pricing level, so we can see there's going to be a lot of stops under this low. I love when we have a high or a low below or above a fair value gap. Okay, we have a low here that's just above this fair value gap. High probability we will come back in here, and that's within the discount pricing zone. That's where I would be looking for any longs if I want to long this market. That doesn't mean I'm going to put in a limit order to go long there. No, not at all. I still want to assess the market when it comes down here. I still want to make sure my view is still bullish, and time is the most important factor. It's time, then price. Okay, so I want to see that occur at the right time. Okay, let's jump into a 4 hourly chart, and I want to show you what's going on. Okay, so if I jump into a 4 hourly chart, these fair value gaps on a 4 hourly chart are high probability. Okay, now what's going on here? There are people longing this market inside of this fair value gap. Okay, I want you to watch this, and I want you to notice when the market comes back down, it stops out anyone that's already long from this level. Okay, because the market will come down to rebalance and enter into this order block. Okay, that's going to be a good entry. However, that's still not, to me, wholesale pricing. That's still premium pricing. I want to see the market come down into discount pricing, okay? And you can see there's another 4 hour order block at this level under discount pricing. That's where I want to be a buyer. That's, to me, wholesale pricing, okay? That is also where we had nice displacement, okay? And these big gaps need to be balanced, okay? So under that is where I like to look for my entries when I am bullish on a market, okay? That doesn't mean we're going to get there. That just means, okay, if it doesn't get there, okay, fine, I'm happy to let this move go, okay? But at some point, I do believe we will get down there. And if that's at the right time, with the right setup, on the right day, then that offers a good opportunity to be a buyer, okay? We can expect repricing higher, okay? The fact that we are reacting from this level, okay, is good. I like to see that because I feel that will be the initial manipulation, okay? And that proves the market is still willing to go higher because we have some, if we get displacement, but ultimately those folks who are long from there will be stopped out because the market will come back to rebalance this and then maybe even go lower. So there'll be a few things that'll happen that I want to see. I want to see this reaction. That's great. It's going to entice longs to get into the market. That'll be the fake move, right? The manipulation. We come back down, rebalance this. That'll stop hunt out these folks, and we might get another move, okay? And then at some point, we come back all the way down here. Stop out everybody, get in at discount pricing with the institutions, and that'll be the bigger move, okay? So there's a few things to watch out for, okay? But ultimately, I am looking for discount pricing, okay? Not interested in taking any longs at premium pricing, okay? Now, if we also just take the same idea and do that on this 4 hourly chart, so we have a low here, and a high all the way up the top, you can see in this bigger range, which the big boys are looking at, okay, the institutional traders, the market makers, they're looking at these bigger time frames to identify where is discount pricing on the bigger time frame. You can see that discount pricing on this bigger time frame is under this particular level, okay? So even right now, this is at the midpoint. That's still not a level that I would be interested in. Ultimately, I want to see pricing back down here, okay? But into this gap, is valid on a higher time frame, but then on a higher time frame, you accept larger stop loss levels. Okay, so if you're trading on a 4-hourly time frame and you are getting in somewhere here, then you need to accept that the market may go back down to a lower low, and you need to accept that risk. Okay, so this video is just all about discount pricing. Okay, use the range, trying to identify the low and the high. You got to make sure the low you're choosing is a low that's taken out liquidity. Okay, of that leg that you're looking at, and the highest high within that leg. What I can see is this fair value gap, this low just above that fair value gap makes it high probability in my view. Okay, it's very similar to the, if I go back to a 15-minute chart, the trade that I did sometime yesterday or the day before, where I took off my long from Asia at this level, because that was high probability, because that is the high just below this fair value gap. Okay, in the same manner, we now have a low that we are referring to, which is this low, okay, on a 1-hour time frame, okay, just above this fair value gap. Okay, now the risk, or what we sacrifice if we don't get down there, is the entry for any move higher. There's no guarantee we get down there. Okay, we do have a balanced price range from this down candle. Okay, we've kind of moved up through there and back down. Okay, and so it's very possible we don't get back down there. Okay, but I'm content with that because I want to get the best price. Okay, a wholesale price. I'm content with missing the long. If we don't get down there, it just means I will find another entry at another time frame somewhere else on the chart in the future. Okay, hope that video was useful. I will now talk with you in a future video.